But here in the U.S., domestic investors, at least for long-term investments, it's interesting because most Americans prefer real estate over stocks. According to a new Bankrate study, 31% of respondents say they would choose the housing market when investing money they won't need for 10 years. Here to break down the study with us is Bankrate Chief Financial Analyst Greg McBride. And Greg, why do you think Americans are so comfortable with putting their money in real estate?
Well, I think for one, it's that people have really never warmed to the stock market despite this 10-year bull market. Real estate has a tangible nature to it that I think people really grasp onto. And I think also there's this sense that real estate, unlike the stock market, it insulates you from those sharp 20% drops that we had seen in the stock market that really rattle investors. That yes, as we learned in the last decade, home prices don't always go up. But people have I think they grasp onto the tangible nature of real estate and the fact that they feel a little bit more insulated from loss, particularly if it's a use asset.
And what about people who are now feeling like, because of the situation with the economy, even if there was a Fed cut, they don't feel that they would be borrowing any more money than that?
Yeah, it was interesting. I mean, it makes you question why the Fed's going to cut rates, because it certainly doesn't look like it's going to do much to alter the financial behavior of Americans. Only about 1 in 4 Americans said that they would borrow more money or be likely to borrow more money with interest rates falling. About 1 in 3 said they'd be likely to put more money in the stock market. And even those that said they would shore up their savings, fewer than half. So the overwhelming majority of Americans likely to stand pat even with lower rates.
Greg, to me, though, the most interesting finding had to do with my fellow millennials here, because millennials scored the highest among all age groups in their preference for real estate in terms of long-term investments. I assume that's partially because we were around when the crash happened and the Great Recession burned a lot of people. Do you think that's why millennials are so afraid of the stock market?
Well, absolutely. I mean, millennials, in addition to having the highest preference for real estate, they have the lowest preference for the stock market of any age group, which I think is troubling from the standpoint of accumulating retirement savings. Millennials are going to have the biggest retirement savings burden in history. The only way you're going to get that nest egg is if you're compounding the higher rates of return from the stock market over a long period of time. In terms of real estate, it really throws on its ear that notion that millennials don't want to buy homes. I think very clearly they've got a strong preference for real estate, and many of the millennials that aren't buying in their 20s may well buy in their 30s.
Are millennials also a part of the thinking about not borrowing more money? That millennials did live through 2008, so they are maybe hyper aware of the idea that what a good mortgage is versus a mortgage they can't afford? Are we raising finally a class of Americans?
Well, yes, I think we've seen a big mentality shift in millennials relative to their predecessors, in the sense that, and we've long seen this ever since the Great Recession, we've seen this throughout the economic recovery, a greater aversion to debt, a greater inclination towards savings, taking those kind of steps to really be on a more solid financial position and, insulate yourself a bit from a sharp downturn.
And not only that, but also if you're drowning in student debt, you might not want to take out a mortgage as well to go with it. Hell of a combination that one is. All right, Greg McBride, thank you so much. Appreciate you taking the time, sir.